This could spell disaster for recent home buyers. Hey everybody, my name is JJ. We're going to get back into housing market news today in the housing bubble 2.0, what many people are calling it. And we want to look at a statistic and some data that's typically a very good indicator of home prices being extraordinarily overpriced. And let's take a look at this chart right here. This is out of wolfstreet.com. And this indicates the owner's equivalent of rent of residence. So what the owner could rent out the home for compared to the price of the home. And we look at the purple line, that is the Case-Shiller median home price, the 20 city index, and we see that it ran up big time compared to rents before the housing bubble went bust in 2007, 2008. Now what are we seeing? We're seeing it even higher than what it was before the previous housing bubble. So for those of you out there saying that this is not a housing bubble, take a look at this chart. And the home price versus what you could rent a home for is almost off the charts. Now, this was a survey that was conducted just recently. So this takes into account the recent rapid surge in home prices. Now, why is this problematic? Well, it's not just an indicator. It's not just a chart that tells us that homes are overpriced. But look at it like this. Being able to rent out a property can be a lifeline for a homeowner. So imagine yourself a homeowner, you have a mortgage payment. Some people don't, but most people have mortgages. And imagine if something happens, you lose a job, a major expense comes up, or you have to relocate, and therefore your income situation, your financial situation rather, has changed. Well, having a huge mortgage is going to be a problem unless you can rent the home out for enough to cover your mortgage, right? That could be seen as a lifeline. Okay, I work in the industry. I talked to a customer just recently who could no longer afford the payments. So she went ahead and moved in with a relative while she rented her home out for enough to cover the mortgage. She bought her home several years ago, so she was able to do that. Recent home buyers here just in the past few years, many of them, I'll say even most of them, by looking at this chart, will not have that lifeline. They will not have that option, right? So even though rents are rising, they're not rising near as fast as home prices are rising. Now, this is different in each area. Residential real estate is local, so not every zip code this is going to apply to, but in most major metropolitan areas, especially the places we've seen the biggest rise in home prices, rents have not kept up. They've went up, but not as fast as home prices. Okay, and just our last report, we talked about the million plus people that are losing their supplemental unemployment benefits. How many of them are homeowners? How many people with these cuts in benefits that we're seeing in unemployment benefits are going to be able to keep up with their current payment on their home, their mortgage? And if they bought in the last few years, they're not going to have this lifeline. They cannot rent the home out for enough to cover the mortgage. That means they're going to have to sell, one, get foreclosed, two, or get someone else to help with the mortgage payment, maybe take on a few roommates. Right, who knows? But this chart is absolutely insane looking at it and the separation between then and now. People thought that this would never happen again after the housing bubble went bust, but here we are again, and way out in the twilight zone, basically, the stratosphere as far as home prices compared to rents. Now, if you want to take a look at this yourself, maybe on your home or a home that you're looking to buy, Investopedia has the formula. Just go right over here, formula for calculation of price to rent ratio. And here's what it says here under this formula for this home price ratio. What is the price to rent ratio? The price to rent ratio is used as an indicator for whether housing markets are fairly valued or in a bubble. The dramatic increase in ratio leading up to the 2008-2009 housing market crash was, in hindsight, a red flag for the housing bubble. Trulia produces a price to rent ratio called the Trulia Rent versus Buy Index. For those of you interested, you can go and search for that, which compares the total cost of home ownership with the total cost of renting a similar property. So it's not just the price of the home that you have to look at. You have to look at the cost of ownership, the taxes, the maintenance, in some cases an HOA fee. And if you factor those in, well, this chart that we just looked at, which just factors in the home price, would be even more ridiculous when you factor in all the carrying costs. So in my opinion, being able to rent your home out to cover the mortgage costs and the monthly carrying costs is huge, and that can give you great peace of mind. And like I said at the beginning of the video, basically a lifeboat for homeowners that get in trouble financially. All right, and this is highlighted pretty good out of this article, 7 reasons to rent out your home. It's an older article, but it still applies today. This is out of realitybiznews.com. And they're calling it here home security. So even if you're moving out of your home to a new location, it will give you a sense of security knowing that you can always go back to your old home if needed. So instead of selling your home, you're still able to hold on to your home. You can rent it out for what it takes to cover the mortgage. And then maybe in the future, you can move back when situations change with your job or your income. Instead of selling your house, as it says here, and losing the money, a rental home will always be there for you. Well, that's if you can rent it out for enough to cover your mortgage. So again, a lot of recent home buyers, if something happens, could be in big trouble. Now, anything could happen. I'm not saying this is going to lead to a downturn, because guess what? They can extend the foreclosure moratorium for who knows how long, to infinity. And on top of that, what else are they going to do? We're looking at 40-year mortgages probably here in the very near future. They can do a lot of things to kick the can down the road and prevent prices from dropping. Now, some of you may be saying, hey, JJ, if a homeowner gets in trouble, he could just turn around and sell it, because home prices have went up so much, they could probably turn around and sell it for what they paid for it and then some. Well, factor in the closing costs and having to basically pay a realtor 3% commission in most cases. And especially if you just bought your home recently, you still may not have enough equity. Even though home prices have been going up pretty quickly, you still may not have enough equity to sell it and still have a gain at the end of it when you factor in all the expenses. So is anything in the cards, anything that's happening now that's going to pop this housing bubble? Well, nothing in my vision anyways. Actually, there's more being done to keep the bubble inflated and getting bigger. We see the money printers still pushing mortgage rates low. They bounced up and down here a bit lately, but still near 50-year lows. We've got this $25,000 stimulus payment for first-time home buyers. That's going to cause even a bigger push for people to go out and buy homes and add to the pile of people. Multiple bidding wars on the homes basically going to get worse. So instead of any price discovery, it's more fakery and manipulation and market propping, essentially. Now, a recent example of how insanely crazy this housing market is in this current bubble and the prices and the bidding wars. Take a look at this just out of MSN.com here recently. Bay Area homebuyers pay $200,000 to $400,000 over the home asking price. All right, and this was for a home in Danville. And that's one of the stories out of here. There was so many people putting in bids, they just said, let's just go $200,000 and put ourselves above the rest of these offers. And there's another story out of here of one that went for $400,000 over the asking price. And no, they were not cash buyers. These are people that got a mortgage and they took on the debt. And when the money printers are done propping these markets up, look out, because you could have big trouble when you have this much home and you can't rent it out for half of what the mortgage payment is. In many cases. Thanks everybody for watching this report. We're going to stop it right here. Keep stacking, keep preparing, stay well, stay safe. Until next time, bye for now. Peace.